Hey, what's going on? It's your boy Chike Investing, and we are going to do a weekly log, all right, for the week of February 23rd. Um, that would be the 17th all the way to the Sunday. So we'll start from this Tuesday because Monday was a bank holiday, I believe. And we're just gonna start off from the weekly time frame, and then we'll just end with the 1 hour. Okay. So on the weekly candle for this week, see that we started off by we purged this previous week high and failed to close above it. And now we are coming back in the range with a very, very bearish weekly candle. And if you've noticed, ever since the beginning of this year to the tail end of last year, you've kind of been stuck in this range from this candle's high all the way to this low. And you can see we've just been kind of moving from premium to discount in this range. And when price consolidates, this is not surprising. Really, with this very bullish weekly candle, I thought that we might have the energy to maybe close over this candle next and then take out these highs. But unfortunately, we couldn't do that. So this is showing us that we are not ready to leave this range. And now that we've taken out the liquidity above this candle's high and this candle's high, we could be looking for these targets next over the next couple of weeks. And that's possibly just to come back into the range again. We could purchase liquidity below these lows, this low over here. But all heavy speculation. We're in a range, and what that really means is that you should be buying at discounts, shorting at premiums, and your trades are going to be fickle in nature and short-term in nature, and holding long-term positions, especially overnight, can be quite costly. Now, on the daily time frame, ever since Tuesday, we were hovering in this large premium range. I've been talking about this. We filled in this entire daily SIBI range, right? And we failed to close outside of it. And instead, we are finding resistance at this previous week high and closing, pretty much right on top of it. And then ended up running lower here on Thursday into this daily FEG range, and then rejecting from it and taking out the Thursday previous day high, but actually ended up forming SMT with ES at these highs and slammed lower, inverting this daily FEG on Friday. On the 4 hour, starting off from Monday here to Tuesday, we had this new opening gap that formulated. You can see that we really hovered around it, right? Transitioning from a premium to back to a discount, overlapping this for our SIBI, coming back over it again, coming back to a discount, going back to a premium, taking out these highs, and then closing, well below these highs after wicking them, right? Creating a large wick, purging liquidity, and coming back into the range pretty aggressively. That was a major signal here on Wednesday that price is more bearish than you would like to think, and that these relative equal lows were going to be coming next. Price ran lower, came back into this 4 hour SIBI right here, right? And closed in the lower half of that range, and then made a crazy bearish order block. Finally coming into that daily BISI, which is right here. Let's keep that here. And so you see, we came right into that daily BISI range, found support in the upper half of the daily BISI, ran higher, came and closed in this 4 hour SIBI, going into Thursday overnight, consolidated. Then Friday, we took out this high, forming SMT with ES, slammed lower, creating a bearish order block, came back and tapped it with this candle's high, and came also into this 4 hour, IFVG now at this point. You can see we just tapped the lower half of that, didn't even come to the consequent encroachment, and that was a sign to run lower, slam lower, fill in this whole new week opening gap, completely overlap this daily BISI levels as well, goes in below the on the previous day low as well, and taking out this low from Thursday and coming back into this old rejection block. Now, we ended up here on the 1 hour. On the 1 hour, a lot of consolidation all week. Again, look at this new opening gap. We made a high above it and left relatively equal highs here. At some point, I like to see those get taken out. Those still look a little suspect for me. So if we do come back and break market structure and start running higher, then these relatively equal highs could be in the cards for me. These relatively equal highs here could be in the cards for me. Okay. Price ended up slamming lower coming into Tuesday AM session. Took out these relatively equal lows. Okay. Then by 10 a.m. we consolidate, price finds support on this 1 hour wick. You can see we're closing in the upper half of this wick right here. You can see that. Price finds support on that. 1 hour takes out this low, closes higher, starts breaking market structure. Going into the PM session of Tuesday, makes this high overnight, basically around the Asian session. From Asian all the way down to London to the pre-market. Price now on the 1 hour. Let's get closer here. On the 1 hour, comes back into this 1 hour SIBI. And one thing about this 1 hour SIBI here, you can see we have this bearish bullish order block that has now got inverted. Okay. As well as this 1 hour SIBI, you can see that price is overlapping there. Wicks from that, touches it one more time in the lower half of that, starts to slam lower. Create this now next 1 hour SIBI right here. Bodies are closing in the lower half of that as well. 7 a.m. creates another bearish order block. And now we're starting to escape this new week opening gap. Comes lower, comes and taps this rejection block. Why is it rejection block? Because this wick took out this low. So now this is now an intermediate term low. It's going to be hard to break. Price comes here. It doesn't take out the liquidity here. It runs higher. And guess what? This wick from over here is still, relevant. Why? Because we have not broken it yet. And we've not closed through it yet. So this is still a level that could be sensitive that price is rejecting from. So price is in the upper half of this wick again. And you can see that if you extend forward, it actually remains relevant for the rest of the week. So pretty much until here. And so when you see a PD array like this that has been hard to break through throughout the week, it's good to keep on your chart because then you won't be shocked when price starts to reject and run higher, even though you have a bearish bias. Price runs lower, comes into 10 a.m., wicks, starts creating a bullish order block, inverts this old 1 hour SIBI over here and finds support in the upper half of it, runs higher, ends up taking out the London and Asian highs, okay? And also, but fails to take out the Tuesday previous day high, but takes out these London and Asian highs, okay? Then breaks market structure lower overnight, creating this bearish order block, going to Asian, and then creating the propellant block right here. Price comes back into this old 1 hour SIBI right here, and then comes back into the discount part of this wick from over here. But you can see that this candle fails to close through it and continue to expand away, right? It comes back up, creates a 1 hour bullish order block, runs higher, consolidates in the lower half of this, what is this, a 4 hour SIBI at this point? Yeah, 4 hour SIBI. And then also in the lower half of this new week opening gap. And then prior to the 9:30 open, price wicks above this high at 5 a.m. one more time, and then slams lower. Really large, expansive candle. You can see it gave all the people who had stops below here, here, and here, and here no chance to pull out their orders, right? This is what you want to see. A really large, immediate purge of liquidity where price is actually obviously going somewhere, okay? Now we're in this daily BISI level. As you can see, we reject from that. It's our first time tapping it. Plus, we engaged a lot of orders below this low. Price then comes back into this 1 hour, large fair value gap that was formed in the first move of the morning. And you can see that that was pretty much the drawn liquidity for the rest of the PM session. One thing I remember is that in the PM session, like I wanted to see how we would react off of this large wick. Right, you can see that we are, having a high resistance move back into here because of the wick that was formed. And we spend most of these candles really in the lower half of it. And we come all the way back up into this 1 hour SIBI level pretty much by 3 p.m. Now I remember like on lower time frames, this was it was hard for me to understand, right? Like if price is going to wick a couple times here, usually on this second candle right here, if it's not starting to expand away, then usually like that would just be a sign to me that we're having a high resistance, draw liquidity higher. But on lower time frames, I just wanted to be careful, right? Because when you're really, really aggressively, if the market is selling off aggressively, even if we're in this daily BISI level, price could maybe just stop here in this wick and then run lower for the day. So I was watching market structure on a 15-minute, 5-minute to see which way it was supporting what the hour would likely do. And you see that going into 2 p.m., 3 p.m., price ended up rising higher. Then overnight, we consolidate in this old 1 hour SIBI and in the bottom half of this wick from over here on Tuesday. We make it out to a premium, right, overnight, and then coming to the pre-market, we take out this high, but then we close, the bodies close on this previous week high, right? inside this new week opening gap after purging liquidity, immediately slams lower, inverting this 1 hour BIST, closing well below this candle's low. And then coming back to this old 1 hour BIST here, closing well below that. You can see that this already is telling you that if price has just disrespected all the discount arrays, it's probably really bearish. And then price runs lower, ends up closing below this low with a lot of speed and a lot of force, and makes just like a very, very large move for the day. Pretty much all hourly candles just being bearish. And so one thing to note for going forward is when you see that how aggressively we are, like disrespecting PD arrays, and we're not even like wicking at them and returning back to a retracement, like that just shows you how bearish and how weak the market really is. And so you should really only be looking shorts. There's no way that you should be looking for any retracement trades. But hopefully this has been helpful, and I'll catch you guys in the next video.